Good afternoon. My name is Kelly Earle. I'm the Senior Vice President of Skeena Resources. Skeena is an exploration and development stage company that's revitalizing the past-producing Eskay Creek project, which is located in the Golden Triangle of Northwest British Columbia in Canada. We're listed on the TSX, and we just acquired a New York Stock Exchange listing at the end of last year. So this is where we are in the Golden Triangle, a very prospective region that's had a lot of activity lately. We have two past-producing mines that we both acquired from Barrick called Snip and Eskay Creek. Hochschild Mining, the Peruvian mining company, is earning into an option on Snip for 60%. So that leaves us with our Eskay Creek project, which is our flagship, and that's what I'll focus on in this presentation. I'm not going to go through the whole management team, but just to say the latest addition to our board and to our management team is Randy Reichert. He was with B2 Gold. He was their VP of operations, and we were able to snag him to come help us build the Eskay Creek mine. So that just happened. He just joined us last month. It's a very exciting addition to the team. One of the reasons we really like this area is vast improvements in infrastructure since these mines were in production in the 90s and early 2000s. So the government in British Columbia has spent billions of dollars opening up the north to bring jobs and prosperity. So Highway 37 in the northwest transmission line now goes all the way up to what is now Newcrest's Red Chris mine. And then we have an access road to Eskay Creek, and after the mine shut down, a hydroelectric company came and built 3 hydroelectric facilities off the access road. So in an area that was once remote, fly in, fly out, and a mine that was all diesel powered now has access to very inexpensive hydropower. So the mine will be fully powered by hydro. There's 2 other projects I would highlight on that area. We're just in the process of acquiring some more land in that area for more regional scale targeting in the future. So history on Eskay Creek, it produced from 94 until 2008. It was the highest grade gold mine in the world while it was in production. It produced at 2.5 ounces gold equivalent per ton. The cutoff grades were extremely high because the mine was so remote, the price of gold was low, and it was all diesel powered. So when the mine started, it was direct shipping ore only with a 30 gram per ton cutoff grade. And then once the mill was built, it dropped to a 15 gram per ton cutoff grade. So pretty crazy by today's standards to think that those were the cutoff grades, but they were. So our thesis, we first optioned it and have since exercised the option from Barrick, and it's 100% ours now. Our thesis in acquiring this project was simple. What material was left behind that was not economic when this mine was in production that would be economic now because the cutoff grades were so high? And the second thing is we are looking at this from an open pit perspective as opposed to an underground mine. So it was an all underground mine historically. So this is our current resource. This came out with our PFS last summer. We're currently sitting at 5.6 million ounces gold equivalent. That's the overall resource. And that converted into 3.88 million ounces of reserves, and it's averaging 4.6 grams per ton gold equivalent. So extremely high grade for an open pit mine. It'll be one of the highest grade open pit mines in the world when we get it back into production. So these are highlights from our PFS study, which came out last year. We will have a full feasibility study out next month in June. There's not going to be a huge difference between the PFS and the full feasibility study numbers. We added, say, 200,000 more ounces from inferred into M&I. So the resource should be right around, the reserve should be right around 4 million ounces. You can see it's extremely robust at $1,550 gold, $22 silver. We have a $1.4 billion after-tax NPV at a 5% discount, 56% after-tax IRR, 1.4-year payback. It's an extremely robust project, and that's because it's just so high grade for an open pit. So some differences we can look forward to in the feasibility study. Instead of producing 352,000 ounces a year, we'll be closer to 400,000 ounces a year. The grade should be very similar, right around 4.6. Mine life is going to shrink a little bit, but we're not concerned about that because we're doing exploration and have intentions on adding many more ounces. And then, of course, the CapEx is going to go up, as we all know, inflation. Well, I've been guided it should be about 25% increase on CapEx. And we are fairly sheltered from inflation because this is a brownfield site. So we have a permitted tailing storage facility on site already. We have a construction camp that can house 250 people. We have roads already. There's a hydro facility nearby. So that does help to keep the inflation lower. So this is a proposed mine plan, and the only thing I really wanted to point out is our fully permitted tailings storage facility. So this is called a dead lake or a non-fish-bearing lake. There's a smaller lake beside it that says Albino Waste Facility. That was the original storage facility. It has 2 million tons of waste rock in it, and Barrick filled up that lake. So they had to go and permit the much larger lake next door, but then the mine shut down shortly after they permitted it. So there's only a few 100,000 ounces of tailings in there. It has ample capacity for everything we envision in the feasibility study, and most importantly, it's already permitted. So a little bit about the potential upside. Thus far, Skeena has really only done infill drilling. We inherited a database of about 500,000 meters from Barrick. It was selectively sampled. They were only after one very high-grade horizon called the Contact Mudstone Horizon. That's where all the historic underground workings are around. So we did about 100,000 meters of infill, and that's what we focused on the last couple of years. Now that we're done all the infill and we know what's there, we can really start to focus on exploration. So this coming summer is our first real exploration program. We're going to be doing 60,000 meters to add hopefully first some near surface ounces. So we've already had 2 new discoveries of ounces that are very close to surface, and that's our top target. And then after that, we'll move to underground targets. So we've already found some. For example, here we hit 314 grams over 2.21 meters. Eskay is known for having some extremely high grade. You can see this is outside of the pit. This is in a new zone that we've discovered. This is a VMS, so they often come in stacked sequences. So this is something we'll be following up on later this year, and we're very confident there'll be an underground component to the mine in the future. And finally, we're looking at the depth potential of that original horizon called the Contact Mudstone. They never found how deep it went, and that's the material that was running 2.5 ounces per ton. So there's a bit deeper holes, but there's a great prize if we find something. So very busy season of drilling ahead. Here's just an example of what I was talking about, a new discovery we've had. You can see the pit there on the left. We're only about 115 meters away, and we've hit some nice, it's lower grade than overall, but this is what we were expecting because you're out of the high grade horizon. It's 2 gram per ton material, and this is the exact kind of material that we're looking to find first before we go chasing after some underground ounces. This is just an example of when we did infill drilling. You can see where the pit limits are there. We let a few drill holes go deeper because we're looking for stacked sequences, as this is a VMS. You can see we've already hit 2 new horizons. These are not included in the reserves. There's some spectacular grade there, and it's a top priority target for drilling this year. Just quickly want to point out where Eskay Creek would stand in gold mines in Canada. We'd be about the 4th largest producer if we were in operation today, but after the feasibility study comes out, we hope to be the 3rd largest. And of course, what sets Eskay Creek so far apart is really the grade. Quick comparison of the Brucejack mine, which Newcrest just bought out. It's in our backyard. It's rare that you get a single asset company that you can compare to just like this. There's a lot of similarities, of course. They're underground, we're open pit, but the size of the resource is fairly similar. The number of ounces is very similar at 352,000 a year. Of course, all our all-in sustaining costs will be less because we are open pit, and there you can see the valuation. So Newcrest bought them out for $3.5 billion, and Skeena's sitting just under $800 million Canadian. So we definitely see a lot of upside potential, and I think with some discoveries this summer, the resource will get much larger. One unique thing about Eskay Creek, it's also going to be one of the lowest carbon dioxide emitters of any mine globally. So it's sitting at 0.18 tons of carbon dioxide, whereas most open pits average 3/4 of a ton. And that's, of course, because it's high grade and we're connecting completely to hydropower. So a bit of an update on what we'll be doing later this year. We're in the middle of that exploration drilling I mentioned. Our feasibility study is coming out next month. We're in the middle of permitting. We'll have a permitting charter coming out with the collaboration between the Skeena, the British Columbia government, and our Taltan First Nation partners. Our impact benefits agreement with our First Nation partners will be out in the fall, and then we'll look to do project financing at the end of the year. I just wanted to briefly touch on our relationship with the Taltan. We are very fortunate to be in Tahltan Territory. They actually made a $5 million equity investment to Skeena last year. It's the first time they made an investment into a mining company, and it's because they want to have more ownership of the projects that are being developed in their neighborhood. So we're very happy to have them as partners. And with that, I think it's my time. There's the last slide, shares outstanding, market capitalization, and our coverage. I'll be around if anybody has any questions. Thank you.